Hey everyone, Mortgage Nerd here. Dolphins Dominoes again. So talking about forbearances and how I feel the waiver foreclosure is not going to be as bad as people think, mainly because of these forbearances that are helping get people through this tough time. Unlike the market crash 12 years ago where people were forced to go into foreclosure because they had no other choice, they had modifications. Modifications were terrible. They forced you to stop making payments. Worst thing ever. Either way, let's look at a couple charts and some good quotes also. So this chart shows how many forbearances have gotten out of forbearance. Remember, a lot of my clients, they come in and they say, yeah, I'm in forbearance, but that's because they told me to. And it's kind of like a free lunch. They were just taking a free ride, but they couldn't refinance. They couldn't buy another property because they were in forbearance. They're in something that's designed to help people that can't pay their mortgage. So if you can't pay your mortgage, how can you refi? How can you buy? They are out of it. They said, I'm going to start making my payments and get back in. And they're doing it. So the number of mortgages in active forbearance decreasing dramatically. If we look back, this is May, 4.7%. I saw 8% in there at times, down to the 2s now. That's really good, really good. Some of these people need to keep extending because they're still affected by COVID. Maybe further lockdowns are going to hurt it even more. So let's look at this chart. It's the pie chart. Upon exit, what are they doing? Most of them, 54.6%, are paying in full. Like, hey, I saved that money every payment. I don't have to add it to the end of my loan. I'm just going to pay you the lump sum because thankfully I didn't need it. 30.7% are working out a repayment plan, so it's not added to the end of their loan. 14.7% are still in trouble. That's not good. Loan deferral is 23.9%. This is really good for us to see that we're not going to have that huge issue that we had 12 years ago. So either way, I've been saying it all along, we're not going to see a market crash. We're going to see positive appreciation. If you didn't see it in this video, see it in one of the last ones. Wearing my Dolphins shirt with my little messed up hair. I know, who cares? And the fog dissipating. Either way, we're not going to see a market crash. Things are going to maintain. Forbearances are helping. Low rates are helping. The inventory does need to come up. So when all these foreclosures do come in, it's going to help balance our market, bring down some of that appreciation, and just ease us into the next few years housing wise and kind of stay good. We don't need to have such strong appreciation. We need to level off and wait for incomes to rise again. Phil Stevenson, Mortgage Nerd, thanks.